Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The government will set up an alternate investment fund worth 25,000 crore rupees to provide assistance to stalled affordable and mid-income housing projects. A one-time gain ensured Tata Steel remained profitable in the second quarter. Other operational parameters, though, were at multi-quarter lows. Moody's has placed Yes Bank's rating under a review for a downgrade, citing the lender's weak capital position and exposure to stressed assets. Indiabulls Finance approves a fundraising plan through non-convertible debentures. It has also approved issuance of warrants through a qualified institutional placement. And it's going to be a busy day in the earnings space. Four nifty companies, BPCL, Sun Pharma, UPL and Powergrid, will be reporting their second quarter earnings today. All right, now let's first talk about the U.S. markets. It was another tepid day of trade for the U.S. stock markets. Benchmark indices ended flat, owing to constant flip-flops over the trade negotiations between the U.S. and China. Ranita Young of Bloomberg News wraps up the trading action in this report.
U.S. stocks ended mixed on Wednesday as the U.S. and China trade situation continued to roll on, with a report saying that the two may not sign a preliminary deal until December. Corporate earnings also continued to march on. But during the day, we saw a lot of companies news. HP Inc. rising after the Wall Street Journal reported that Xerox is considering a cash stock offer for the PC maker. Uber Technologies sunk during the session for a fifth straight day as its share lockup expired. And we do have more corporate earnings results coming through the week, which include Expedia, Fitbit, and GoDaddy after the bell. Meanwhile, a chance of a U.S. recession inched down to 26% within the next 12 months. That's according to Bloomberg's own numbers and figures. And the U.S. productivity gauge unexpectedly posted its first decline since 2015. WTI crude oil sunk, no surprise there, and treasuries and gold rose. Those are safe havens, and it was very much a risk-off day during the session. Investors probably sought to store the value of their assets. And that's a look at your Wall Street action on Wednesday. In New York, I'm Ranita Young for Bloomberg News.
Right, so Ranita just mentioned that trade uncertainties were at the center of what's happening in the markets as of now, and they're back as of now. Sources tell Bloomberg that the potential summit between President Donald Trump and Chinese President Xi Jinping, where they're expected to sign phase one of the trade deal between the two countries, could be pushed to December at best. And the two proposed locations of Iowa and Alaska in the United States have been rejected. Jody Schneider of Bloomberg News brings you more details.
They had tried to come up with a location and a time, and both when and where are kind of the holdups now. They had hoped to meet in Chile at an international summit. This is President Trump and Chinese President Xi Jinping. However, now it looks like, well, now that's canceled because of the protests there in Chile, and they're having trouble finding a spot to meet. As just noted, Iowa and Alaska had been ruled out. That had been they had been hoped to do something in the U.S. And now it's uncertain when it will occur and where it will occur. December looks like the most likely time, and they're still figuring out where to go. Now it looks like maybe somewhere in Europe or Asia. The Chinese are said to be concerned about having tariffs off the table, the next round of tariffs, and a deal on tariffs before they will go to the U.S. and take that political kind of risk. And now it looks like they may not want to be going to the U.S. at all to sign what is expected to be a limited deal.
What kind of deal even is it now? You know, it sounds like it's fairly limited in terms of what agenda items are on the table and can actually be ticked off by the time this signing happens.
That's right, Heidi. They're really looking at what they're calling a phase one, although that's a little optimistic. That implies a phase two, but a pretty limited deal that would require the Chinese to buy more products from America, particularly agricultural products, but also some other kinds of things, but things like soybeans, in exchange for the U.S. having some relief, giving some relief on tariffs to the Chinese products, including looking at not going ahead and imposing this next round of tariffs. It doesn't seem to be going beyond that. Things like changes to China's industrial structure are not on the table at this point. They've really been able to just hatch out a limited deal, and it's been back and forth. Even this has been difficult.
All right, the SGX Nifty indicating that we could be in for a flat start here in India. But before we take a look at the trade setup for the day here, let's have a look at how the Asia-Pacific region is doing. Sophie Kamruddin is joining me live from the Hong Kong studios. Good morning, Sophie. How are we looking at the start of trade?
Well, Asian stocks are trading mixed with modest gains to the upside, with the ASX 200 just leading those gainers with some earnings in view. One of Australia's biggest lenders, the National Australia Bank, is climbing despite reporting a drop in cash profit. Now, S&P says a dividend cut will help offset that profit downturn and maintain NAB's capital strength. Now in Tokyo, we are seeing Japanese stocks fluctuate with automakers under pressure. Toyota is to report results later today, and Mitsubishi Motors is sliding this morning after slashing its profit outlook. And SoftBank is falling as much as 4.2% as the group posted its first quarterly loss in 14 years of $6.5 billion on write-downs on Uber and WeWork. Now, over in Korea, the Kospi is set to snap a 5-day gain. And here in Hong Kong, we are seeing stocks open to the downside off 0.1%, with Tencent among the biggest drags. But I want to highlight Geely, which is gaining ground. This after CICC lifted the price target for the car maker by 14%. This on a sales recovery seen in October. Now over in Shanghai, we're seeing shares open lower by 0.2%. Now a quick word on bonds. We are seeing a rebound with U.S. 10-year yields falling to 1.81%, but short-dated JGBs, they are slipping amid talk of fiscal stimulus in Japan. Back to you.
Thanks so much for that, Sophie. All right, let's take a look at what else is making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
Cyprus is revoking the citizenship of fugitive Malaysian financier Joe Low, along with 25 other people who obtained Cypriot nationality through the country's Investment for Passport program. Low is accused of masterminding the 1MDB scandal, which saw more than $4.5 billion allegedly misappropriated from the Malaysian Investment Fund. He denies any wrongdoing. Factory productivity in the U.S. unexpectedly fell in the last quarter for the first time in 4 years. That suggests a pickup in efficiency earlier this year was only temporary. Non-farm business employee output per hour decreased at a rate of 0.3% in the September period. That compares with the median projection for an increase of 0.9 in a Bloomberg survey. State-owned entities in China are said to be in talks about investing up to $10 billion in the hotly anticipated Saudi Aramco IPO. The Beijing-based Silk Road Fund is among parties that have been in discussions, with other mainland funds and SOEs potentially joining in. Any Chinese investment in Aramco would bolster ties with Saudi Arabia and allow China to profit from global oil production. And UK budget officials are set to deliver a warning shot to politicians later Thursday amid fears that the election campaign could turn into an arms race of tax and spending promises. The Office for Budget Responsibility may add as much as £20 billion, or $26 billion, to its budget deficit forecast for next year when it unveils projections updated with recently introduced promises. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Agam. I think we started not too long back with the SGX Nifty indicating a gain of about 0.2 or 0.3%, and it's fallen off that. How are we looking at the start of trade?
Well, Alex, we have to keep in mind that yesterday it turned out to be a very positive session, and well, on an intraday basis, we saw the Nifty move back about the 12,000 mark. That is exactly what the SGX Nifty is indicating at this point in time. It's currently trending above the mark of 12,000, though marginal gains, not too much to speak for. The question really is that should we see the Nifty, well, open in the green can it sustain above the 12,000 mark? In any case, for now, as I was suggesting, we saw about about 0.4% gains, but there was underperformance of the broader markets. The broader banking indices were mixed. We did see a lot of gains in the private sector space. And as far as your ADRs are concerned, again, for now, mixed moves coming in. ICICI Bank along with HDFC Bank is showing some amount of gains, and these are heavy weights. We very well could see a little bit of a lift because it was essentially the private sector banks which led the gains in the Nifty yesterday. Infosys along with, so Infosys gaining, but Wipro declining by around 1.5%. But when it comes to fund flows, FII is once again back into the buying spree, this time to the tune of around 1,011 crores, and DIs was selling nearly just the same amount, just a little over that. But as far as contributors concerned, this is what I was making, the point I was making. ICICI Bank and HDFC Bank essentially lifting the indices higher, along with financials, some heavyweight financials like HDFC Limited. That was to a certain extent cancelled out by Titan because it was a tough day for those who were long in Titan. Reliance Industries, Bharti Airtel and TCS, among others, well, are showing some amount of weakness. What about futures and options? How are things panning out there? Well, we did see about a 6% increase in open interest towards logs for the Nifty futures. The Nifty banking futures also seeing a 21% increase. Again, on the back of the private sector space gaining. But as far as your open interest distribution, maximum OI goes, there's not too much change. We have max OI in the 11,600 put and the 12,000 call, and that means the Nifty is expected to move within a range of this 400 points. The real question is, should the Nifty move about 12,000 and possibly close about 12,000? Where does that range shift? For now, it does seem like 12,000 has a pretty strong, resistance on the higher end. So we're going to have to wait and watch out on that one. And as you can see, we saw more writing around the 12,300 and 12,400 mark, despite the fact that the indices moved higher. And that's evident here. Of course, there was also writing in the 12,000 put, so that is, of course, also a positive. But moving on, let's also talk about your wicks, and that came off, not surprisingly, below the mark of 16. It's comfortable level. The Nifty put call ratio has been largely unchanged. It's actually 1.44 against 1.43, so it really hasn't changed as much. But moving on, let's also talk about stocks. We're keeping an eye on Voltas. It did see a lot of accumulation open interest. Earnings were largely in line, but a weak quarter all the same. Titan, of course, saw that knock of around 10% yesterday. It was a tough day of trade for that one. Lupin also reacting to earnings. But let's talk about some of the other stocks we saw unwinding. And we have Balakrishna Industries, which was in focus. We had a broking note coming in, which is why we saw short covering coming along there, a positive one. Coal India and Dabur, among others, which were also in focus. Alex, once again, it is going to be about, markets reacting to earnings that came in yesterday. Tata Steel, for example, is the key watchable, and those which are coming on today.
Absolutely. Thanks so much for that, Agam. Now, before we get into those earnings that Agam was just talking about, there is a key development that came in last evening post a cabinet meeting, and it has come as a relief for home buyers waiting on stalled housing projects. The government has announced a special fund that looks to provide last-mile funding for such projects. Nikunj Johri has more details in this report.
The government has announced a 25,000 crore rupees relief package for the real estate sector, which is expected to complete about 1,600 stalled housing projects and about 4.58 lakh housing units or homes. The Union Cabinet has approved setting up of a special dedicated fund that would be funding stalled middle income and affordable housing projects. The announcement for a fund was first made in September, when the finance minister had announced that the government would put in about 10,000 crore rupees in a dedicated fund that would help in completion of stalled middle income and affordable housing projects. The eligibility criteria of the fund was previously that only non-NCLT and non-NPA projects could avail the benefit of this fund. The government has now relaxed this criteria and has said that even a project which has been classified as an NPA and a project which is under NCLT can avail the benefit of this fund. The only criteria is that it need not have a negative net worth. The initial corpus of the fund would be 25,000 crore rupees, and the remaining 15,000 crore rupees would be put in by State Bank of India and Life Insurance Corporation of India. The government is also hopeful that other sovereign funds and pension funds would also put in more money and take the corpus size to over 25,000 crore rupees. The fund would be managed by SBI Capital Ventures and is expected to complete about 1,600 housing projects.
Now, most of these details emerged in a statement that was released after Finance Minister Nirmala Sitharaman held a press conference yesterday. Here's what she said about how the fund will work.
ये फंड जो हम अभी ओपन कर रहे हैं उसके द्वारा इनकम्प्लीट प्रोजेक्ट्स जो लेस देन 2 crores का वैल्यू हर यूनिट का होगा मुंबई मेट्रोपॉलिटन रीजन में जो 4.58 लाख हाउसिंग यूनिट्स का मैं बोल रही हूँ ना उसका वैल्यू मैं रफली बोल रही हूँ मुंबई एरिया में 2 करोड़ हो सकता है 1.5 करोड़ हो सकता है एनसीआर में चेन्नई में कोलकाता में पूना में वगैरह हैदराबाद में बेंगलुरु में अहमदाबाद up to that level and 1 crore in any other part of the country. For that, for these incomplete projects, इस फंड के द्वारा एक एस्क्रो अकाउंट में पैसा डाल करके एक प्रोफेशनल ग्रुप शुरुआत में हम एसबीआई कैप के द्वारा चला रहे हैं वो ही चलाएंगे इस प्रोजेक्ट को रेरा में रजिस्टर्ड जो भी इनकम्प्लीट प्रोजेक्ट्स हैं उनको एक प्रोफेशनल अप्रोच के तहत नेट वर्थ पॉजिटिव जिनका है मतलब कुछ I have sold some flats, I have many more to sell, I have assets. ऐसे नेट वर्थ उनका असेसमेंट करने के बाद those projects will get funded for the last finishing stage tak 70% complete 30% incomplete for completing the 30% incomplete this money will go to the escrow not as a lump sum at one go one stage tak you need this much you take that much that is complete you take some more third stage you need some more you take like that in stages up to the stage that they complete we give the money so that once the handover happens the home buyer takes it and he is now no longer got to worry about his project complete hoga ki nahi hoga agar ye NPA bhi ho this project has already been declared an NPA even then they can benefit from this earlier aapko yaad hoga we came up with 2 conditions saying those who are not NPA can benefit and we had also said those who are non-NCLT you can benefit. Now we have withdrawn those 2 conditions.
All right, let's turn to earnings now and the ones that were reported yesterday. It was an operationally weak performance from Tata Steel in the September quarter. The company's bottom line was aided by a one-time tax gain, but other operational parameters were at multi-quarter lows. Nikki Mirchandani summarizes the 5 key takeaways from Tata Steel's numbers.
Well, Tata Steel has not come out with as impressive set of numbers. In fact, if you look at the reported EBITDA performance, that missed the estimates by quite a huge margin. Reported EBITDA is, in fact, at 11-quarter low number. If you look at the profitability, that's pretty much surpassed the estimate. The company has reported a number of roughly around 3,300 crore, and we were working with an estimate of little less than 500 crore. Clearly, the beat is coming in on account of the corporate tax change, which has benefited the bottom line performance. But what really has weighed down on the operational performance is the liquidity condition, the weak demand situation that we're witnessing across the industry, and the inventory buildup, which is weighing down on the operational performance of the company. What's really concerning at this point of time is the company going ahead and suggesting that they're going to be recalibrating their debt reduction plan of $1 billion by the end of this $1 billion by the end of this year. It was early at the start of the July 2019 when we had suggested that there seems to be unclarity with the way the company is going ahead and reducing the debt. We also also interviewed the management with regards to that, which at that point of time sounded pretty confident of its debt reduction plans. But clearly, on account of that weak demand situation, the company is now recalibrating the debt picture as a whole. What also is not encouraging is the kind of commentary that they've given for auto, where they've suggested that the H2 contract prices is lower than that of H1, and also they've suggested recovery might come, but at this point of time the state remains pretty fragile.
All right, let's turn to Indiabulls Housing Finance now, and it too reported earnings after market hours yesterday. While the loan book shrank, asset quality was stable. The company has also approved fundraising plans. Shefali Malik takes you through the key highlights of the numbers.
At a headline level, Indiabulls Housing Finance reported inline set of earnings, the net profit coming in at about 709 crore rupees. That's in line with the expectations of about 702 crore rupees, and the net revenue came down by about 26% to about 1252 odd crore rupees, but that's slightly below expectations of 1395 crore rupees that Bloomberg had. And their profit was aided by a lower tax rate, which came in at about 6% during the quarter. That was mainly because of the DTA adjustment that they took during the quarter. The gross NPAs and net NPAs, gross NPAs went up marginally to about 1.57% versus 1.47% on a sequential basis. Net NPAs, however, came down sequentially, very marginally during the quarter. Their loan book, however, that came down substantially by about 29% on a YOY basis. Those are the on-balance sheet loan book. That's about 82,135 crore rupees at the end of the quarter. And they did disbursements of about 7,000 odd crore rupees during the quarter. And the management said during the con call that they would like to get back to a run rate of about 3 to 3,500 odd crore rupees when it comes to disbursements every month. Their spreads also saw a slight contraction to about 3.08% versus 3.14% on a sequential basis. And other than that, the board of the company also approved fundraising via secured and unsecured redeemable NCDs up to 10,000 crore rupees, and also issue of NCDs along with warrants via qualified institutional placement of up to $1 billion. So those were the main highlights of the results and the fundraising. And during the con call, the company said that they are going to pursue a new asset-light, retail-focused business model. And this fundraising that I just talked about, they've just taken an enabling resolution for the same. They will be exercising the same at an appropriate time after they get all the approvals. And with regards to the buyback, they said that they've taken feedback from SEBI, and only post that they will work upon it. With regards to the Oak North sale, they said that they're not in a desperate position right now. However, they are getting a lot of interest for that particular investment. And about the commercial real estate book, they did agree and they did say that there is a trust deficit with regards to their book, and the only way to win over that is to completely run it down. And with regards to the perjury that they filed, and that has been expedited to November 29. So we look forward to that date. It was supposed to happen in December earlier, but now expedited. So we'll keep an eye on that.
All right, on to the earnings that we have to watch out for in today, over the course of the day. Both BPCL and HPCL will report their second quarter earnings today, and strong refining and marketing margins may be partially offset by inventory losses and tepid demand. Somit Sarkar is standing by with what the markets are pricing in for each of them. Good morning, Somit. How are these looking?
Well, both the companies are expected to report a strong set of numbers because of a stronger refining and marketing environment. However, some of these positives will be offset by an inventory loss and tepid consumption growth that we had seen in the second quarter of financial year 2020. Now, for BPCL, if you see the headline numbers, the revenues are expected to be lower by nearly 5%, but the net profit is expected to see a jump of nearly 55%. EBITDA is expected to be higher by nearly 44%, while margins are expected to come in higher at 4.3%. And for HPCL, compared to last quarter, the revenues are expected to be down by nearly 3%. EBITDA is expected to be higher by 66%. Margins are expected to come in higher at 4%, while the net profit is expected to almost double at close to 1,610 crore rupees. Now, the gross refining margin, that is the key number for both the oil refiner, that is expected to come in at $5.6 per barrel for BPCL, and for HPCL it is expected to come in at around $5.2 per barrel. Now, this is on the back of a higher benchmark, that is the Singapore gross refining margin, which averaged around $6.5 per barrel versus $3.5 per barrel in the last quarter. quarter. On the marketing side, if you see, both the oil marketing companies have earned higher gross marketing margin on sale of every litre of petrol and diesel. For petrol, it averaged around 3.4 rupees per litre, and for diesel, it averaged higher at around 3.7 rupees per litre, which will aid the marketing segment of both the oil marketing companies. Now, Brent crude that averaged lower at around $62.12 per barrel. Now, though crude prices jumped the most in the second quarter, but the gains were short-lived, and because of this lower average crude prices, both the oil marketing companies are expected to report an inventory loss in the second quarter of financial year 2020. On the operational side, for BPCL, if you see, the crude throughput is expected to be higher by 7%. Now, that is because in the first quarter there was a planned shutdown, while the sales are expected to be lower by nearly 7% because of a tepid consumption that we had seen in the second quarter. Similarly, for HPCL, the crude throughput is expected to be higher by 19%, and that is because of a planned shutdown seen in the first quarter, where the sales are expected to be down by nearly 8%. Now, both the oil marketing companies are expected to report a foreign exchange loss because of the adverse movement in the exchange rates. Now, the key things to watch out for from both the earnings would be the debt levels and the pending subsidy dues from government. Along with this, the management commentary on the outlook on refining and marketing margins, Kochi refining margins, and status of Kochi petrochemical projects, specifically for BPCL, and for HPCL specifically the capital expenditure plans for FY20 would be important to watch out for.
All right, thanks so much for that, Somit. Now, moving on to UPL, it will also be reporting its second quarter numbers today, but the numbers are not comparable on a year-on-year basis, as Arista's financials were incorporated from the fourth quarter of FY19. Yash Upadhyay takes us through the street expectations from UPL.
So UPL will be announcing their second quarter results today. But before we get into the headline numbers, just a small disclaimer that on a year-on-year basis, the numbers would not be comparable because from the fourth quarter of FY19, we've had Arista numbers being incorporated as well. So on the back of that, we are likely to see the revenues growing by as much as 85% on a year-on-year basis, coming in at almost 7,874 crores. Their EBITDA is seen 94% higher, while margins are likely to expand by about 100 basis points to 20.7% versus 19.7% in the same quarter last year. A net profit too was seen higher by almost 91% at 516 crore rupees. Now, amongst the key factors to watch out for is the revenue growth in the core UPL business, which is excluding Arista, and most of the brokerages, they estimate that to be anywhere in the range of 10 to 12%. However, should the number exceed that mark, that would be a big positive for the company. That apart, Arista business, that is likely to remain flat to largely subdued on a year-on-year basis. But then again, sequentially, we are likely to see a small amount of dip on the top line, about 1% or 1.5% for the company. Now, the main driver of growth for the second quarter is likely to be the LATAM division, which is likely to see a growth of anywhere between 15 to 20%. However, due to unfavorable weather conditions both in Europe as well as India and the North America regions, that would offset the strong growth seen in LATAM business. Currency impact, that would be one thing to watch out for. It has been largely stable for the rupee, so the currency impact will remain muted in the quarter gone by. Trends with respect to input costs, we've seen the prices of most of the raw materials come off in the quarter gone by, so that would be a positive as far as their margins are concerned, and we are likely to see an increase in margins. But that apart, the synergies kicking in from the Arista acquisition, that too is likely to aid their margins in the second quarter, and the performance of some of their new launches that they have had in the last quarter in regions like Brazil and how they performed, as well as the share of the branded products. But all in all, it is likely to be a steady quarter for UPL.
Right, let's turn to Power Grid now, and it will also be reporting its numbers today. Asset capitalization over a 12-month period is likely to contribute to its bottom line. Sharad Dubey takes you through the key expectations.
Power Grid Corporation is expected to come out with its quarterly numbers today, and we expect the revenues to see a uptick of almost 10.6% to 9,162 crores as compared to last year's 8,283 crores in the corresponding quarter. We also expect the net profit to come up almost 8.3% up at 2,500 crore rupees, while EBITDA expectations is up almost 13.4% to 7,904 crore rupees. The margins see an uptick of almost 200 basis points to 86.3%. Apart from this, the key factors at play would be the asset capitalization of 18,200 crore rupees in the trailing 12 months. Apart from this, a high consultancy income might be expected in this quarter itself, and the capitalization for this quarter would be around 3,200 to 3,700 crore rupees, as multiple brokerages have stated. Apart from this, the asset capitalization of 19,000 crore is expected overall for FY20. Apart from this, what we'll be watching out for in the Power Grid's earnings would be the progress on Raigad and Pagalur's project, and also the regulated debt levels, which the company is having. Apart from this, the payment security mechanism is something which we'll be watching out for post the changes which have come from the regulatory bodies. And lastly, the progress on joint venture with NTPC is something which we'll be watching out for. All in all, it would be a healthy and an operational quarter for Power Grid Corporation.
All right, let's turn to the stocks that you have to watch out for in trade today. Soumit Sarkar is joining me now to tell you all about the stocks in news. What else is on your list? I would think that it's a long list today.
Well, it's a long list, but mostly all the earnings are coming in. Firstly, Voltas, the results were largely in line with analyst estimates. The net profit beat was on a higher other income. The project business revenues were weak, while the AC business reported strong growth despite a non-seasonal quarter. V-Guard Industries' strong operational performance despite muted revenue growth. Lower raw material costs and employee costs aided the margins, while increased penetration in the non-south market has resulted into growth for the company. Fortis Healthcare reported a net profit versus a loss on account of an exceptional gain and lower finance cost. Last year, margins were impacted due to hospital service fee expenses, and this quarter, if you see, India hospital business saw a revival in occupancy, while the SRL diagnostic business saw strong EBITDA margins. BACA reported a weak set of numbers due to lower revenues. Financials were also impacted because of higher employee costs. The company reported an EBITDA loss versus a gain last year. Manappuram Finance, very strong set of numbers. Strong NII growth was seen in the second quarter on the back of 32% growth in the asset under management. However, the company's net interest margins contracted. The net profit growth was aided by lower tax rate, while the non-gold AUM, if you see, has seen a growth of 63%, which was the key surprise in the second quarter of financial year 2020. Pratap Snacks again reported a strong set of numbers on the back of strong growth on the revenue side. Standalone revenue grew at the highest pace in the last 9 quarters. The gross margins improved due to benefit of lower raw material cost. Operating cycle improvement, reduction in inventories, and a collection period were the key positives in the second quarter earnings for Pratap Snacks. Mass Financials reported a strong number. Strong NII growth and profit growth was seen in the second quarter. The AUM growth was nearly 26%. Disbursements increased by nearly 17%, while the asset quality for the NBFC remained stable. Lastly, Hindalco's subsidiary Novelis also reported a strong set of numbers. North America continued to drive record earnings for this company, while the autos, beverage, can segment where the strong growth have come in as per the management.
All right, thanks so much for that, Soumit. Well, if you missed any of the stocks that Soumit just spoke about, you'll find it on the website BloombergQuint.com. That and a lot more. That's all we have for you in this edition of All You Need to Know, but do stay tuned. There's a lot more coming up on Bloomberg Quint.